Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this late Friday morning, as usual, on March 22nd. So it's been pretty encouraging this week, as we've talked about a few times. The prior 5 to 6 weeks, really, we did see a lot of churning. So a lot of, not a lot, but we saw some distribution in the extended leaders, just selling on strength, that sort of thing. What we didn't see, to be fair, is a lot of abnormal action, meaning, a huge earnings gap down, that destroyed the stock. We saw a couple of that, a couple of those, obviously. It happens all the time, but we didn't see a plethora of breakdowns and huge volume selling, but we did see some stalling out action, which was a little bit of a change in character. This week, thankfully, at least since the Fed meeting on Wednesday, or the Fed decision, I guess, on Wednesday, we've seen a little bit of a resurgence of buying, not just in the major indexes, but in a lot of leading stocks, including some of those extended leaders. Now, I don't view this as some sort of fresh buy signal. We're about to go straight up for another 3 months. I'm all for it if it wants to happen, but I would guess the odds favor, not something like that. But clearly the evidence, which has been pretty positive the whole time, like I said last week, the green light had just been a little dimmer. It's obviously good to see the buyers kind of step up. From here, though, I still would stick mostly the same playbook. I'm okay extending your line, but I'd still be looking mostly for fresher names that have shown recent power. At the end of the day, these extended names, maybe they keep going. I hope they do. We own some of them. But the fact is they have gone up for 4 months, 5 months. Some of them just hit a new high this week without any real substantial pullback, which just raises the risk of some sort of air pocket here going forward. But overall, positive. We did put some money to work this week in Cabot Growth Investors model portfolio. We're down to a little under a quarter cash, like 20 to 25% cash, call it. But the new buying has been basically focused on hopefully fresher leaders that are earlier in their move, so that if we do get a shakeout, not that they'll, just kite higher while the rest of the market comes down, but if we do get a shakeout or some rotation, they should, hold up and be earlier in their runs and have more upside than some of these other names that honestly, if they did pull back, number one, for the most part, I don't think many of them would be permanent tops, and number two, it's a well-deserved correction. So we'll see how it goes, but overall, evidence has been positive, and it's kind of reaffirming its positive stance this week. Okay, let's hop in the charts. I'm using a product called Market Surge, the updated Market Smith. You can learn more at marketsurge.com. It's a product of Investors Business Daily. So you can just kind of see here. Now, this was sort of the kind of early February to through Wednesday chop phase for the NASDAQ, more pronounced than sort of some of the growth indexes or whatever. And we kind of came up here and did hit a new high. We'll see. I mean, I wouldn't say this is like some sort of major, like I said a minute ago, I wouldn't say this is some sort of major breakout. I mean, we're actually below where we were a couple weeks ago. But I mean, to me, much more important is the trend. Okay, obviously the trend is up. And on the weekly chart, I would just point out, and this is something that we did see a lot earlier this week. It kind of looked like, I don't know if it was Monday or Tuesday, but it looked like some of these stocks were kind of ready to kind of, I don't want to say go over the falls, but maybe break the 50-day line, get on with a correction, so to speak. But they tested their 10-week lines and held firm. And this was kind of the second test you can see right here on the NASDAQ of the 10-week line. Usually the first two, sometimes more tests can be successful. So we'll see how it goes. On the daily chart, we've just been respecting the 25-day line. So obviously the trend is up. S&P 500 has been a little smoother. There's been more, as the sort of the AI tech networking chips started to chop around, the rest of the market was kind of fine. You can kind of see, right here, a little bit extended, but obviously the trend is up. And encouragingly, we actually saw some better action from the broad market this week. So the New York Composite, even the small caps, this is IWM, excuse me, getting hit a little bit today, and certainly still the weakest overall, but got a little bit of daylight above this 50-day line. And if you look at like the MDY, which is mid caps, picking up some steam. The small and the broad indexes kind of outperformed. This isn't updated during the day, so this is the IBD 50 index, and it's kind of a little bit of a sloppy chart to look at, but just take my word for it. This red line was kind of the beginning of the churning phase, so it held up pretty well. Didn't really fall, just couldn't really get going, and now we're stretching higher. We'll see how it goes. Is this sort of, if you want to be negative, you can say, hey, this is a suck-in, and then we kind of come back down from here. I'm not going to go there. I'm just going to say the trend is still up overall, intermediate term wise, and we'll see how it goes from here. But leaders did act better. And same thing with some of these others, like the IPO fund, which hadn't been churning as much, but pretty much a test of the 25-day line and coming up. So it looks pretty good. If you're looking for a sector to watch, I would just keep an eye on chips. Chips have been the leading sector, especially in growth land, AI obviously and stuff like that. Again, this green line is a 25-day simple moving average, so it kind of tagged that and bounced. I'm not saying if it comes back down, it's some disaster, but how this bounce plays out in general, I think in the next week, really, maybe week or two, will probably tell you a lot. We did have this reversal. This was sort of that NVIDIA reversal a couple weeks ago. And, pretty sharp, but normal pullback, bounced. We'll see how it goes. If we just kind of implode here, not so good, we could easily pull back, maybe hit the 25-day line again. But anyway, SMH is just something that I'm keeping a distant eye on. Whether you own any chip stocks or whether you own a lot of chip stocks or not, I think it might be a pretty good, probably your leading indicator for, the NASDAQ and growth as a whole. Okay, so overall, looks pretty good. I don't have a lot to say on the market. Like I said, I wouldn't say it's some huge new buy signal like, oh, well, I was holding 30% cash. Now I'm putting all that to work. I would still let it kind of be on a stock by stock basis, looking for fresher situations on the upside. Okay. So just in terms of potential names, and this is from all over. Okay. So this is Micron Technology. It gapped on earnings. It hasn't been, I'm bringing this up because I do like the chart. I do like the volume and the power. So I like it. But one thing is when you're in a sector that is been doing well and there's, 10 or 15 names that have been, leading stocks, obviously NVIDIA, but other names too. And then you get a stock that just breaks out kind of down the road here. Sometimes that can be susceptible, like these late breakouts. So it's something to keep an eye on. And you can see MU's coming in a little bit here, but nevertheless, I guess what I'm trying to say is the next few days with some of these chip stocks will be telling, like I was just talking about with the index. But nevertheless, MU, this is like a nice gap. It is a nice earnings gap, and it is sort of a cyclical name. And there's no question the trend has really turned up here with sales and earnings and all this stuff. I mean, who knows if these estimates are correct, but next year, basically going from a loss last year to $7 a share next year. I mean, who knows? But looks pretty good. So MU is kind of interesting. ServiceNow is not an unknown company, NOW, but it's kind of had this sort of history. This is maybe a 3-month consolidation, rallies, had this 3 months consolidation last summer and fall, and it's had a beautiful move here. It had one test of the 10-week line, not the most explosive. It's an $800 stock, right? Not the most explosive name. So in here, it's formed this space. There has been some selling in here. It's kind of subtle. But at the end of the day, it's gone from whatever, call it broke out at 600, went to 800, call it, and it's only pulled back to 730. It has thrashed around here, but I'm just noticing the structure. Maybe it can calm down. And if the market's healthy, eventually come on out of here, later this month, maybe into earnings season, something like that. ASML is one of the fresher ones. It, quote unquote, just got going here in late January. And had a huge run, kind of got caught up, went over the century mark and pulled back. This kind of looks like the old overall SMH that I showed before. It wouldn't surprise me. You can see a gap down here. I mean, it's down 20 points, but it's a $1,000 stock. And I know people don't love, and I don't really love $1,000 stocks, but just buy fewer shares if you can. I know it's tricky, but things like this, they can move. I mean, it can move. This thing went from 800 to 1,000, so it's like going from 80 to 100 in just a few weeks. So these things can move. Just try to buy fewer shares, obviously, so you're not as exposed. But back to the chart, it wouldn't surprise me, or it wouldn't be the worst thing if it kind of took a little time off. Maybe the 50-day caught up. You can see on the weekly chart here, you squint, and it kind of looks like it hit the 10-week line this week. Maybe it needs a little bit more time, but let's see how it goes. But to me, this is one that basically just broke out, whatever, and it moved up for say 6 weeks or 7 weeks, which sure, maybe it could top out there and never be heard from again, but unlikely. It's probably going to pull back and find some support. So if this thing can kind of consolidate, maybe the 50-day catches up, it could present a lower risk entry point. There's a lot of construction, housing, infrastructure type names, and not just roads and bridges, but like building data centers and stuff like that. So Quanta Services does a lot of electrical grid work, which has kind of been, obviously like the electrification angle, I guess they call it. But just like a nice big base in here. It's one of these construction firms. It's not gonna, it's not gonna double in a month. But really a nice structure over many months. Beautiful breakout on earnings. You can see this big earnings gap. And just real no desire to pull back here. Obviously, pullbacks would be better than not, but so far so good. That's PWR. Eagle Materials little bit more on just standard like gypsum, wallboard, Portland cement, stuff like that. But again, kind of, I think I mentioned this last week and before, basically just had this super tight area. So, look at the relative performance line. It really just got going a few weeks ago, and it had a 1 week dip and now back up. So just some of these names still look pretty fresh, still look very peppy on the fresher side of things. I wouldn't say this is fresh, but I'm looking for things that at least near term may be fresh. So Lilly and NVO, right? LLY. Lilly broke out, had a big run, and then just kind of has sat around here for 4, 5, 6 weeks. So it's kind of like been churning with some of the leaders here, but hasn't done anything wrong. Had a nice shakeout to about 730. Has had some selling, but let's just see how it goes. Will it die? It's possible. You never know. But so far, so good. So whether it's nibbling here, buying breakout, seeing how it trades, whatever. NVO was a little bit stronger. It had some pretty good, trial. These things are still influenced by trial results because they want, instead of injections, they want pills. It's different dosage. It's longer studies. How does the weight loss stay? All this sort of thing. So it has been losing steam here, but just kind of down to the 25-day line. Maybe it opens up and keeps going lower, but so far I'm just pointing out kind of a normal pullback within an uptrend. And interestingly, there's this was kind of the last couple of days have been weird. I think there was some outside, somebody tried to recommend it or something like that. But this is Neurocrine Biosciences, which got hit on earnings here. We were watching it, and it didn't disintegrate, but just kind of took it off our list. There was better names out there. But, again, on the weekly chart, it kind of had this big rounding base, nice breakout, bunch of weeks up in a row. And now it's kind of like ServiceNow in the sense where I wouldn't say this is some sort of perfect structure, and the last couple of days bear watching. But overall, I'm just saying it's been kind of chilling out here. Biotech's been a little bit out of favor, but now if the Fed is saying, hey, we're going to go ahead with easier money here in the next 3 or 4 or 5 months or whatever, some of these biotechs might be able to kick into gear, okay? Still like energies and commodities. I mean, when I say I'm just noticing the explorers look good, like Diamondback, and I'll just mention Permian Resources. This was in top 10. I mean, it's just up, I don't know, there's been like 2 down days in 2 months, so it's kind of smoke up a chimney here. But even in the services sector, I'm sorry, I can't type today, Weatherford, which has been a huge winner, was a huge winner here, based out, another run, and then based out. And it's you could kind of say it's later stage, but it doesn't look later stage, meaning it looks pretty calm, cool, and collected. And it had this huge shakeout before moving, and then it reported earnings, and boom, right off the 40-week line and keeps going, okay? So it looks pretty good. Tidewater, TDW, I think I mentioned that last week. This was in top 10. So there's just more of these service names, and there's kind of more of a perception like, hey, Fed's going to be easier. Oil's, maybe $75, $80 is the floor, and maybe there's upside, and demand here obviously is still good, okay? And then I'm not going to forget about some retail here. So this one intrigues me. So first, this video is going to be forever. I'm taking too long, but Nike this morning down, Lululemon, not that Nike's a leader, it's not, but Nike's big. Lulu, not a leader, but still, influential stocks, right? Getting really hit hard today. So that is dragging down. This is On Holding. On was a name we probably mentioned here, just in terms of it's got earnings coming up. And then it got hit, and I admit, in my personal watch list, I took it off. I was just like, the hell with it. 3 or 4 days later, I was doing my screens, and I was like, oh, wow, it just snapped right back. And here it actually kind of came out to a multi-month high, coming back down today with Nike especially. Okay, but just looking at the overall structure, it's a big post-IPO thing here for the last couple of years. And then obviously in the last few months, kind of this basing structure. You'd like to see some decisive strength. It's really not, the RP line isn't very strong. But, this kind of bar has the potential to be kind of cleared the air a little bit, shook the last people out. Not that taking off your watch list is a sin, but, stuff like that. So we'll see how it goes. It's something I'm keeping an eye on. Shake Shack, on the restaurant side looks great. Full disclosure, we took small profits a couple weeks ago, so we'll see if that was a mistake, but in top 10 trader. But overall, big earnings gap, handling itself well, extending new highs. And then still in the payments, so some of them in payments are getting tossed around. We kicked one out, half position. This is TOST. It's not out yet, TOST. You can see it's kind of had this resistance here forever. including this huge wipeout here. But it's kind of formed this structure. It's consolidating the last couple weeks. Can it come out? I don't have a specific level for you, but can it break out or chill out a little bit longer? And I'm still looking at square, I guess block they call it now. It's been, it's one of these, again, there's some churning. It's trying to get going, pulls back in, tries to get going yesterday, pulls back in. So it's not quite up and out yet. But again, you kind of have this endless resistance zone, call it. So let's see what happens. Can some of these payment names get going? So overall, it's kind of the same thing, it's sort of shades of green instead of shades of gray. It's just sort of like, to me, the evidence got, quote, worse from very, very good to good over a few weeks. And the question is it still going to be kind of good, like choppy but good? Or is it kind of resuming its uptrend? Or do we get some sort of blow-off move into earnings season, next month? That's kind of the question. Overall, I see enough leadership stocks that are the one, assuming you already own them, certainly are holds, for the most part, partial profits aside. And I'm just seeing still a decent amount of fresh leadership that's holding. And it's not like it broke out, but then as soon as the, NVIDIA has an update, they sell off and there's rotation. It's everything kind of, rising tide lifts all boats. So overall bullish. I still think, at the end of the day, after 4 or 5 months up, you want to pick your spots, aim for fresher names, but the path of least resistance remains up. Okay, that's all the time I have for today. Thanks for listening. And as always, come by again next week for another Cabot Weekly Review.